please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. Well, normally Infosys as a bellwether, not just of the ID sector, but of the entire earnings season, would have had a rocking impact on the markets. But today, obviously, the events of the weekend, which just rocked the world, are going to have an important impact. I'm intending the very precise bombing of Syria, led by the US, and of course accompanied by the United Kingdom and France. This, at the moment, has not really rocked financial markets. Asian shares are down, and when we last saw, Hang Seng was particularly down. It's a market from which we take a lot of cues. So, down almost 1%, that's a bit of a worry. But as you can see, Nikkei is still in the green, so it's not a terrible bother just yet. But we have enough of our own problems, Sonia. We have our trade deficit numbers and crude at 73 or 72. Both of which should have a negative impact on the currency and generally an overall negative impact. So while Infosys itself could have been shrugged off, I doubt we'll be able to shrug this off. Good morning, though. What do you make of it?
Well, yes, Lata, good morning. And, after 7 days of gains that the market has seen, perhaps all of these cues put together could prove to be a bit of a resistance at this 10,500 level. Having said that, on Infosys as well, the margin guidance was a bit of a dampener, right? I mean, 22 to 24% is what they are guiding. And last year, they did better than that at almost 25%. So I guess that's something that the street would not like. Apart from that, on the flip side, though, there are good earnings from the likes of DCB Bank, Roof Finance. You think that could...
That's what I thought. All the three financial earnings that came in DCB should have been logically impacted by all those NPA issues. But looks like DCB has done a good job of its own. Even its slippages have fallen rather sharply. As well, ICICI Securities, excellent earnings, and Gru Finance. I mean, Gru, of course, is a repeat, consistent, good performer, although a high-priced stock. But I would think ICICI Securities numbers have turned in excellent, both quarter-on-quarter and year-on-year. So there are highlights for the markets, and bond markets have behaved themselves.
Yeah.
Bond yields fell on Friday after a rough week. So all that will mean that at least the banking sector should not be very badly off. So as you say, yes, there could be an interesting tussle between the bulls and the bears, and much will depend on how badly the global financial markets take the Syrian attacks.
Oh, absolutely. And one more important cue to watch today is the Met Department will be releasing their first official forecast of the monsoon at 3:30 p.m. And I was going through a couple of, reports. There are indications of another year of normal monsoon. They talk about this neutral ENSO. It's not La Nina, but ENSO is the El Nino Southern Oscillation, which is favorable. So maybe we could get some good news there.
We could, and the market could be on the front foot anticipating that. SkyMet has kind of prepared us for a positive Met announcement. And if Met does what SkyMet did, then yes, probably, a lot of the global negatives could be, obviated, could be prevented. But really much depends on that. There have been times when the SkyMet and the Met have violently disagreed. And that's for 2 consecutive years that has happened. So let's see how the market awaits the Met Department's announcements.
Okay, so a lot of big cues lined up. We kick start a brand new week on that front. But let's take a look at what our wise experts have to say as we head into trade this morning. Mahesh Nandurkar of CLSA forecasts an earnings decline of about 2% on a pre-exceptional basis in the 4th quarter of FY18 for their coverage universe, dragged down by banks, telecom and oil and gas PSUs. He expects domestic sectors such as autos, media, property and consumer to likely lead in growth. CLSA expects the domestic revenues to rise 10% year-on-year to a 6-quarter high. A turnaround in banking and pharmaceuticals will be needed to drive the 20% earnings growth that CLSA expects in FY19.
Okay, so not terribly confident, but still better. Sakti Siva of Credit Suisse is overweight tech, largely in old economy tech. She highlights their overweights in financials, real estate and materials. Credit Suisse believes improving breadth helps the sustainability of the rally, together with the 3 positive fundamentals that they highlighted recently of rising ROEs foreign investor capitulation, and healthy 2018 estimates consensus EPS growth of 14.1%. But remember, she's speaking of EMs in general.
Okay, so that's the view coming in from Sakti Siva. But let's also get you some money market views this morning. The rupee trading somewhere around 65.30. That's how it closed on Friday. Pramit Brahmavat of Veracity believes that the rupee will trade sideways in absence of any directional cue. The trading range for the spot dollar INR pair would be 65 to 65.50 to the dollar.
Well, I would think it will be 65.30 to 50 to the dollar, because I think the cues are distinctly negative. Both the trade deficit cues and the oil cue. Yeah. So I would expect pressure, but let's see how things pan out. It must be a weak rupee that we are heading to. Ajay Manglunia from Edelweiss speaks about bonds. He says volatility in yields is expected to persist, driven largely by global geopolitics at the start of the week, even though the previous week ended on a positive note with robust demand at the auction. Traders are expected to be cautious today, tracking the impact on crude prices and the rupee. He believes the 10-year benchmark bond yield is likely to trade in a range of 7.41 to 7.48. Today, you will have to take a little bit of negative impact, higher yields because of crude, as also because US yields have risen from 2.7 to 2.84 because of the attacks.
Okay, yes, the attacks are the big talking point, right? Not just overnight, but over the last few days. And that, of course, has had its impact on world markets. Let's go over to Nigel to find out what trade is looking like this morning. Nigel.
Well, in Friday's trading session, the US markets, they ended in the red. In fact, the Dow was down close to around 100 points. The key reason, though, was the banking stocks. We did have some earnings reactions that played out. JP Morgan, we had Wells Fargo as well as Citi. All of those numbers looked quite good, actually. But the stocks had already run up, so that's why we did see some profit booking. This week itself, we have a few more banking stocks that will come out with a set of numbers. So we'll be keeping an eye out on Morgan Stanley, Goldman Sachs, as well as Bank of America. Well, besides that, we also had some economic data that did come out. The University of Michigan, well, the consumer sentiment data out there did see a bit of a contraction. So that was one factor that played out. And even after a bit of a cut in Friday's trading session, for the past week, the US markets, they ended with gains of around 1.5% to around 2.5%. The big concerns really in the last couple of weeks was, is there going to be a big trade war with China? Well, now the fears are of an actual war breaking out, because over the weekend, we had, those air missile strikes on Syria by the United States, and that was in conjunction with the French as well as United Kingdom. But the European markets, if you take a look at it, well, they ended with some mild green in Friday's trade. Overnight, crude prices, they've come off actually a tad bit. They're down closer around 1% from the recent peak. Though safe haven buying is evident, gold is seeing a bit of an uptake. We have some safe haven buying on the yen as well. And that, in fact, is moved to around 107.5 from around 105.5. Asian markets, they were holding more or less steady. Now they've virtually moved to the low point of the day. The Nikkei has come off the top. The Hang Seng, in fact, has moved virtually to the low point of the day, sitting with a cut. And all those factors that you all were discussing in terms of the SGX Nifty, we have Infosys to contend with, a trade deficit number as well, maybe a weaker rupee. And that's why we're likely to start off with a cut of around 60 points odd. Back to you all.
Moments from now, we're going to get you some experts to tell you how to move on crude, because that's actually the only reason why the Indian markets could be under pressure. So let's just take a quick look at crude prices right now. Remember, the prices have been escalating, but on Monday, that is this morning, the prices have fallen a tad bit. So currently trading at somewhere around 71.8. As you can see, it's 1% lower now. Jonathan Barrett, the economist and CIO at AS Alliance, joins us now to talk about that. Jonathan, hi, good morning. Following the Western airstrikes in Syria, there has been a lot of big moves in crude. But what's the sense you're getting? Do you see Brent crude raise to, somewhere around $75 a barrel or so in the near term? Or do you think the pressure could be arrested at this level of that we're seeing this morning?
Good morning. Look, obviously a lot of volatility, there's no doubt about it. Very interesting that Asia has taken more of a negative slide to it. But I get a sense that when you look at two things occurring, obviously military action, we're seeing sanctions against Iran. So when you look at the region, it's once again that it has that potential to really take hold of concerns. And as a result of that, I think we can see the potential for the Brent to trade through to that US $80. It can't be ruled out at the moment. When you see what's happening outside Russia, when you see what's happening in Syria, you get a sense that there is potential for retaliations. That should see prices relatively well bid.
Okay, well, at the moment, of course, the market appears to be discounting that Syria is not material to crude. It's not a producer. As well, there has been a goodish bit of dollar strength, and that seems to be keeping all commodities slightly weak. Jonathan, therefore, what would your range be for crude? Are we going to see it continue to inch towards 75, or is 72 proving to be a very good resistance?
Look, I think the interesting thing here, you sort of hit the nail on the head. With the US dollar has been in a very tight range, slightly firmer, slightly weaker. When we've looked at some of the commodities, we're seeing some horrendous moves. Last week we saw crude oil up 8%. So I think the dollar influence on the market is not what it used to be in some of these commodities. Okay. And I think they're trading on their own merits. So I think when there are further restrictions due and there are further issues, geopolitical concerns, then the market sees genuine risk. That's why we're seeing, I think, a move for crude and, of course, a move for some of the precious metals.
No, so the range, Jonathan, that do we get past the $72? Do we go towards 75? What would your average be for the next 3 months?
I think given where we are with the current set of macros, I think you'd have to look at sort of 70, 50 on the downside. The top side has to be 75. If there's an escalation of this tension, then I think you could see that US $80 a barrel. Oof. Remember, those sanctions that we're seeing now could bite quite heavily across some of the commodity spectrum. And if there are these issues, the market will say, well, look, we have tight issues. Now, one of the key things that I'm focusing on also is that Chinese data due out tomorrow. If that suggests more growth, then we could see some more tightness. So when you see the combination of strong growth out of China, you see military concerns developing in the Middle East, you see sanctions and issues over in Russia, then that creates a very volatile situation.
The other thing, or the last thing, I mean, you've of course detailed all the major points, but the last thing that everyone's been talking about is the increase in US oil drilling activity. So, there's been 7 new oil drills that have been added recently, and a lot of people are talking about how that could actually put pressure on crude prices in the near future. Would you agree?
I would hope so. I would like to see that's the case, because the worst thing for our economies is to see volatility, in our primary input markets. Now, when you look at the Baker Hughes rig counts, when you see that, you expect more crude to come on. The interesting thing is that it will come on, but if the economies are picking up, then that will create, still that surplus will be taken in quite quickly, and that's a concern.
Okay. Thank you very much, Jonathan Barrett, for putting all those cues on the table. So at a minimum, it looks like it's going to be 70-50, which is still higher than all the assumptions made in both the Indian budget as well as the CPI calculations of RBI. RBI's calculations were based on $68. So either which way, there's going to be a minor negative effect if 70-50 is about the least